Es genial ver cómo el dinero trabaja de tantas formas con XTB. Porque XTB ofrece muchas oportunidades de inversión. Incluso para tus ahorros, tú decides qué hacer. También puedes negociar activamente con diferentes instrumentos financieros. Todo en la aplicación de XTB. Ahora el dinero trabaja por Zlatan. Y no es Zlatan por el dinero.
Invertir conlleva riesgos.
Es genial ver cómo el dinero trabaja de tantas formas con XTB. Porque XTB ofrece muchas oportunidades de inversión. Incluso para tus ahorros, tú decides.
Muy buenos días a todos, mi nombre es Diego Mora, director de estudios del broker XTB Latam. Es un honor para mí estar este día sábado 31 de mayo junto a todos ustedes porque nos depara el día de hoy un evento magnífico. Tenemos tres de los principales exponentes del mundo del trading a nivel internacional. Por lo tanto, el día de hoy prepárense un café, acomódense ya que tenemos un evento de talla mundial. Tenemos a Katie Lien, John Wolfenbarger, tenemos a Alexander Elder. Por nuestra parte estará Ignacio Mieres de la casa, ya lo conocen, y Alejandro de Luis presentando diversos tópicos sobre el mundo del trading. Por supuesto, como es usual, lo primero es que me puedan confirmar audio y video. Los voy saludando de inmediato acá en el chat. Tenemos, por supuesto, a nuestros clásicos de siempre. Tenemos a David, Gladys, Anabel, Héctor, muy bienvenidos todos. Por favor, vayan confirmándome que se escucha perfecto. La idea de esta instancia día sábado es que sea lo más interactivo posible. Evidentemente, estos tres ponentes internacionales hablan inglés, pero no se preocupen que tendrán durante todo el evento subtítulos en tiempo real. Yo estaré leyendo sus preguntas también para que podamos ir enviándoselas a los presentadores. Así que la idea es que se sientan lo más cercanos a ellos, ¿ya? A ver, voy leyendo acá. Tenemos confirmación de audio y video por parte de nuestros espectadores. Así que excelente, me parece excelente. Estamos completamente listos para poder comenzar. Vamos de inmediato al grano. Tenemos la primera ponencia del día de hoy, una experta mundial del mundo del trading, más de 20 años de experiencia en los mercados de corto plazo, principalmente en el mundo del forex. Lo he conversado yo también con ella cuando yo inicié en el mundo del trading. Me leía sus libros para entender cómo funciona el mundo macro, cómo funciona el mundo intraday, una experta y referencia absoluta, cofundadora de BKTraders. He estado también como presentadora en CNBC, Bloomberg, Reuters. Por lo tanto, es para mí un gran honor presentar en esta ocasión a Katie Lien, que nos acompaña el día de hoy. Good morning, Katie. How are you? As I said before, it's such a pleasure to have you here in XTB Latin presentation. So, how are you this morning?
Buenos dias. I am doing very, very well. And I apologize that I don't speak Spanish, but I will try my best to speak slowly so you can understand that everything I want to share with you. But buenos dias, is my pleasure to be here today.
Yeah, of course. Don't worry about that. We have very good tools to so our people can understand you. But feel free to talk as much as you want. We have dubbing in real time. I will asking you some questions for the people. So please go with your presentation.
Fantastic. So I want to welcome everyone to my presentation on talking about how to trade in volatile markets. Now, generally speaking, before I begin, I like to get a feel of what all of you have been trading. So please let me know in the chat box whether you trade forex, gold, or indices. So I make sure that I talk a little bit about each of these that you trade. So please let me know. I can see here that you're coming from throughout Latin America, Bogota, Ecuador, Peru, Argentina. So I know that most of you are on my time zone. But let me know, what do you trade? Do you trade forex? Do you trade gold? Do you trade indices? Or do you trade something completely different? NASDAQ. Okay, Gonzalo says NASDAQ. Andres, indices, Danielle, CFDs, mostly Forex, Pineda, Jose, US 500, Alejandro, both, gold. Okay, very, very nice. So we have a lot of indices traders and a lot of gold traders, primarily futures, a little bit less Forex. My expertise is in Forex, but the strategies that I will share with you today are applicable, and you can use them for many different instruments, including gold and stocks and NASDAQ and S&P. So wonderful. I am so glad that I'm already prepared to cover the instruments that you are trading. And I'm getting a lot more FX traders right now, which is really wonderful. Pound yen. Rio, pound yen is definitely not for the faint of heart, but okay, let's go get right into it. Thank you so much. I'm so glad to see that all of you are trading so many markets. So let's go ahead and begin. From 1967 to 1981, the stock market had a very, very tough time. So many of you may have just began to trade, I would think, in the past 4 or 5 years. And for most of you, the market has just been in a boom, at least the indices market. It's been a straight line, not quite a straight line, but, it's just been a move towards record highs. And so not many people have experienced the volatility and the possibility of down markets and bear markets that, some of us who've been trading for a long time have been prepared for. So even though, the stock market has generated very positive returns over the past, 5 to 10 years, there were periods like 1967 to 1981 where the stock market made zilch, zero, and a whole generation lost wealth. And not many people are prepared for that. 2025 is a year that will most likely be a year of negative returns. And the problem for a lot of people is that, especially when you're an investor, you only think in terms of buying dips and going long only. And if you have a financial advisor, oftentimes they're not shorting stocks for you. They're not taking advantage of down markets. They're not taking advantage of the drops and the pops. They're only, looking to buy. And that's, what most people have become accustomed to. But because 2025 and maybe even 2026 will be year of negative to zero return in stock market, it is very important for all of us to learn how to make money when markets are falling. And so that's what I hope I will share with all of you today, which is to teach you a little bit about how to turn a bear market into your own bull market, how to basically learn how to make money in both rising markets as well as falling markets. Because I think this year and the years ahead, you will learn that trading is really a life skill. It's a skill that, once you learn it, it's going to help you throughout many courses of your life. Because with trading, you will be able to create income with less risk and less capital. It's not as if you need to invest $10,000, $20,000 and generate 5% return, for example. With trading, because of leverage, which, certainly comes with risk, you can be able to create income using less capital, and you can control more amount of money and use that to help yourself turn the bear market into a bull market. So I think it's very, very important to learn that trading is a life skill. But how do you do this? How do you actually, learn the strategies and the techniques to create income in trading and in the markets? And that's what we're going to talk about today. And we're going to start by talking about understanding how to have the right strategies for the right market. And this is, true if you trade gold, if you trade forex, if you trade indices, if you trade crypto. It's this philosophy is very, very important. And the way to think about it is that, before we even talk about trading strategies, it's important to think about what type of trader you want to be. There are basically two ways to trade. All trading boils down to two things. Either number one, where you target, $3,000 by risking $1,000, and that's what we call basically high profit trading, where you have, very good risk reward. You're risking 1,000 to target 3,000. The second way to trade is what we call high probability, where you may only be targeting $250 a week or $250 a trade, risking the same amount. So when you trade, you need to make a decision. Do you want to be a high profit trader or a high probability trader? Do you want to win basically only about 50% of your trades and hope for the 50% that you win to be those big winners? Or do you want to maybe win 70% of your trades and just collect what we call what the market calls base hits, where you collect small profits that add up to consistent return? So would you prefer small losses, small wins, and frequent profits, or fewer trades, less effort, with greater risk and bigger profits? Type into the chat, let me know what you prefer. And the reason why I want to talk about this is because one of the greatest challenges that traders have is really controlling their emotions. Would you rather have loser, 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 and a big winner, or small winner, small winner, small winner, small winner, one small loss, one small winner, one small winner, one small winner? What do you think would be more comfortable for you psychologically and emotionally? Option 1 or 2, which is, loser, 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 big winner, or basically small winner, small winner, small winner, small winner, small loser, small winner, smaller winner, small winner, small winner, small loser. Option 1 or option 2? Okay, so many of you saying option 2, but some of you, like Juan, is also saying bigger profits. And both is perfectly fine. But, the problem people have when you have a problem controlling your emotions and controlling your trader psychology, sometimes the solution to that is trying to figure out what type of strategy you prefer. Do you want, when going into your trade, do you want to focus on small wins and small losses, frequent profits, or fewer trades and, bigger profits? And, it's very important to realize that thinking about this now before you put on your trade is probably the best time to do it. When you have your trade on, you're going to be so emotional. You do not want to be making that decision when you are actually trading. You want to think about what type of trader and what you want to be before you even place that first trade, because that will frame your mindset and help you understand whether or not you want to be high profit or high probability. And I love that right now we have both. Right now it's probably 50-50, Diego, right? 50% people saying that they want option 1, and 50% saying they want option 2. And that's, but I want you to all think about that now and not when you are trading. So and to answer the question is, you want to ask yourself, can you handle losing $1,000 to make $3,000? Or would you prefer to make $250, risk $250, and win 3 out of 4 in 5 trades? That is very, very important to be aware of, because a series of losing trades, sometimes we lose confidence, and a series of losing trades make you afraid of losing more, afraid of trading, and afraid of trusting your strategy. So now it's time to take control of your trading, to understand, before you even put your first trade on, what type of trader you want to be. And when you decide what type of trader works for you in your mind, in your emotions, in your psychology, that's when you pick the strategy that works for you. I'm going to teach you strategies a lot of the speakers today will share with you their strategies as well. And, you know, a lot of these strategies are very effective, and it may be too many strategies for you. So the first question for you is pick based upon what type of strategy works for your own personality and your own emotions. And honestly, in my experience, in volatile markets, small wins could be key, because when you have volatile markets, that means that you go up, you go down. And so it may not go, you know, may not have a big move. And so therefore, you know, maybe collecting those profits along the way could be a smarter way to trade. And in the trading strategy that I'm going to share with you today, we have a way to both be high profit and high probability. So I'm very excited about sharing that with you. But in general, I think it's very important to realize that when we trade, there are 3 ingredients for a perfect trade. With our trades, the best trades are the ones that are supported by fundamentals, which is the story. And the story doesn't change very often. I mean, the trade war, the tariffs have been something that have been with us since, you know, the beginning of Trump's term. You want to have the story supporting your trade. You want to have the technicals supporting your trade. You want to have the market sentiment supporting your trade. And I will teach you how to look at each of these today. Let's start with the fundamentals. With the fundamentals, it's really about a top-down approach. We are talking about the big stories that are not on CNBC or the business news, but on, you know, the front page of your biggest newspapers. The big stories like trade war, as well as tariffs, along with immigration and things like that, bank crisis, recession, COVID. Those are the big stories. The big stories do not change often. Usually the big stories last with us for some time. So you want to start with the big stories. You want to start with the big stories. And those big stories are the ones that, you know, impact the market. So we all know that right now, the trade war and the tariffs are the biggest story right now. And we also know that, you know, they are probably going to hurt global growth. And so most likely, stocks are not going to hit new record highs again. Most likely, the indices are not going to hit new record highs. So maybe we want to look for opportunities to sell. And so, or, you know, if we get into a period where, you know, we have central banks like the Federal Reserve cutting interest rates, it probably won't be one. It will probably be a series of interest rate cuts. So you want to think about the big stories first. Then
Okay,
you want to watch
Kathy,
sentiment. With sentiment, you know, and I'll go into this more detail a little later on. But with sentiment, you want to be aligned with what the market is thinking every single day. So I'll give you an example. If, for example, the stock market and stock indices and futures and NASDAQ is falling, I am not going to be looking to buy pound yen or CAD yen or euro yen, which, you know, is moves in the same direction of stocks. I will be looking for opportunities to sell, because you want to align yourself with the market sentiment. Or if you trade gold, you know, usually when stocks rise, gold falls. When stocks fall, gold rises. So if stocks are down, you know, 2 to 3%, I am not going to be looking for opportunities to sell gold. I'm going to be looking for opportunities to buy gold. So you want to align yourself in the direction of market sentiment, because that's when you have the most highest probability of trades. So if there's one thing that I want you to take away from this part, is that when you trade, you want fundamentals, technicals, and sentiment on the side of every single trade. And we'll talk more about that as we go forward. But I want to talk about technicals right now. With technicals, I've been trading for a very long time. I've been trading since 1997, believe it or not. And, you know, many people change the way they trade, you know, with time. But I've been pretty much trading the same way for a very long period of time and using the same indicators. And personally, I love moving averages. And so I'm going to talk to you, I'm going to share with you, you know, certain moving averages that I really like, and I'm going to share with you how to turn that into a trading strategy. So moving averages can be very powerful depending upon whether you're a day trader or whether you're a swing trader, and they can be valuable in very different ways. So these are the moving averages that I find, are the most valuable, and I think that they are truly the only, in my opinion, the only indicator you really need. So starting off, each moving average serves a different purpose, and I want to break down for you how they work. So for day trading, if I'm day trading, I love to use the 5-day simple moving average. This is on my chart every single day. And what I love about the 5-day simple moving average is that it's a short-term momentum guide. Not everyone looks at the 5-day simple moving average, but as a general rule of thumb, if you are a day trader, and of course, if you're a day trader, you're not using daily charts. You're trading maybe 15-minute charts or 5-minute charts. Even if you're trading 15-minute charts or 5-minute charts, if, like, this is the euro dollar, if the euro dollar is trading below the 5-day SMA, what you want to do is you want to only look to sell. And if it's trading above the 5-day SMA, you want to look for opportunities to buy. Because, usually on a short-term basis, the 5-day SMA, you can see over here, if you see my arrow pointing, can serve as a very important support and resistance level for day traders. And it also is, very popular on shorter time frames. So I personally use the 5-day SMA. So I basically trade on 1-hour charts primarily. So when I look at the 5-day SMA, if we are trading below the 5-day SMA, I'll be looking to sell. I'll be taking the setups on the 1-hour chart that are the short trades. If we're above the 5-day SMA, I will be looking to buy because that shows me where short-term momentum is. The 10-day SMA is basically a checkpoint for short-term swings. It's smoother than the 5-day simple moving average. And so, the 5-day simple moving average, as you saw in the previous chart, reacts very, very quickly. But what the 10-day simple moving average is it's a really, really powerful indication of a shift in trend. And so I want you to follow along with me in the chart. And I'm going to do a check to make sure you understand. The blue line here is the 5-day SMA. And the 10-day SMA. The 10-day SMA says a short-term trend shift. So right over here, you can see we are selling off here. And when we close above the 10-day SMA, you can see that we shift from the downtrend into an uptrend. And here we shift from the downtrend into an uptrend. And you could have bought that shift. You buy the shift, here when it closes above the 10-day SMA, and it closes around 112.40, and euro dollar actually rises as high as 114. And this is a daily chart. Over here, we drop below the 10-day SMA. It's, takes some time. You put your stop at the high of the candle, and, it takes some time to do it. But eventually, you sold at somewhere around 112.80, and it went all the way down to 110.80. This one is not a winning trade, and that's okay. We can't have all winners, right? This one, we were below the 10-day SMA. We close above the 10-day SMA. You go long right around, what is this? Let's say 108.60. Boom, goes all the way up to 115.50. This one, we close below the 10-day simple moving average. This is a smaller move, not a bigger move. And here is another example. So what do we have? 1, 2, 3, 4, 5 winning trades, 1 losing trade. That's what I call high probability. 5 out of 6 winners. Some of them are big winners. You can take your profit using the 10-day SMA as your trailing stop, or you can have a fixed target. But these are the odds I like. 5 out of 6 winners in the euro dollar. Does this make sense? Do you have any questions? If it makes sense and you understand how to use the 10-day SMA, give me a thumbs up. If you don't,
Kathy, can you hear me?
Yes.
Kathy, sorry to interrupt you. We need to restore the subtitles, but to take advantage of this moment, we would like to do a very small summary of what have you told before, from now and earlier. And basically, the thing is to be attending the key stuff of the market. First thing to be attending will be the global trends, okay, to market sentiment, and have a great strategy to work on. I would like to share with the Spanish people right now. Básicamente aquí la idea, lo que está señalando Katie Lien, while the technical support is restoring the subtitles, acá lo importante es lo que solemos comentar constantemente en nuestros seminarios de XTB Latam. La idea es estar muy atento a las tendencias globales, ya punto uno, o sea, es muy importante ir a favor de la tendencia principal del mercado. Si sabemos que el Nasdaq tiene una tendencia global alcista, no estar buscando constantemente cuándo será el último punto del Nasdaq para buscar una caída, sino que tratar de aprovechar esas caídas para retomar la tendencia alcista. Le comento esto para poder hacer una especie de resumen mientras el equipo técnico está restaurando los subtítulos. Entiendo que no están presentes ahora, pero no se preocupen que los estamos restaurando. Pero para poder hacer un resumen de lo que Katy ha señalado durante esta presentación es, lo primero, a favor de mercado y el sentimiento de mercado. ¿Por qué es importante el sentimiento de mercado? Porque de esa manera podemos aprovechar el momentum. Cuando tenemos datos de inflación, IPC, decisión de tasa de interés, el mercado reacciona de una cierta manera, y cuando reacciona de esa manera, el momentum del mercado, por ejemplo, hay una expectativa de que se mantengan las tasas de interés de la Reserva Federal y por algún motivo las reducen más de lo esperado. Evidentemente, esto será una señal muy alcista para los inversores y esto te generará un momentum alcista en los principales índices de Estados Unidos. Por lo tanto, de esa manera, sí o sí tenemos que buscar movimientos a favor de esa tendencia principal, tanto por sentimiento de mercado del dato que acaba de salir, como de la tendencia general de los mercados. Ahora, Katy nos está comentando en este momento sobre estrategias concretas para poder aprovechar ciertos cruces de medias móviles. Cruces de media puede ser 5, 20, 20, 50, 50 o 100, pero básicamente lo clave aquí es siempre a favor de la tendencia principal. Right, Katy? It's very important to have a pretty strong strategy, always being in the market direction. Mostly the global trend tendencies are the most easy way to take profits.
It is, but I think it's also important for them to understand, to think about whether they want to be a high profit or a high probability. Do you want small wins or big wins? Because that's really important to start from a good place and be able to control your emotions and understand your trading psychology.
Exactly. Now, please go on. That was a very little moment to summarize up the thing have you said to our people, but now please go on with your presentation.
So I have some very good questions here, which is how do you spot an opportunity to join the trend? And so one of the ways to do it is to use the 10-day simple moving average, which is that when we cross it, and this is still mostly good for day trading for the most part, once we cross it, that tells you that we shifted from a downtrend to an uptrend. And how do you calculate the SMA? Every single charting package, including XTB, it auto calculates it for you. So you can add this, just type in simple moving average and then put that on your chart, change the time to 10, and it will automatically calculate for you. So one of the really good questions I have is, what is the risk reward? So I showed you this strategy which you can see is both high accuracy and high profit, because we have 1, 2, 3, 4, 5 out of 6 winners. And some of them can be very high profit. So how do you turn this into a high something that makes sense from both a high probability and high profit perspective? The way I would trade this is I would put on a full position when, let's say, we go close above the SMA. Then my stop would be at the candle low. My first target, so I will close half of my position at 1-to-1 risk reward. And then I will move my stop on the remainder, the second half, to break even. So if it continues to move in my favor, I can move my stop up by every 50, 75, 100 pips so that I can lock in more profits. If it moves back and closes my second half of my position at my entry price, no big deal, right? I still made money on the first half of the position. So that's the way I would trade it. And so hopefully that makes sense. But my secret weapon is really the 20-day EMA and SMA. It is so powerful as points to join a trend. The 10-day is great for short-term trend shifts. For those of you that like day trading or shorter term moves, the 20-day is great to join a trend. And it's smoother than the 10-day, but it's really good for those of you that want to trade breakout retracement. So breakout pullback. And the way it works is, let's imagine here we're above the 20 EMA. You watch for it to break below it. You make sure it closes below it, and you wait for it to retrace and touch the 20 EMA, like over here. That's where you would sell. That's where you would sell. I have an arrow here because it does retrace, doesn't quite get there. That's up to you. But this is where you would sell. This is where you would sell. This one would have been a losing trade, and that's okay. There are winners and losers. I always like to show winners and losers, because if someone shows you just winners, they're lying to you. But basically, the EMA, if you drop and it retraces back and it still does not close above the 20 EMA, that means it's still in a downtrend. So you want to look for breakdown, pullback to sell, just like here. Here we broke and we're trading above the 20 EMA. You want to wait for it to pull back, touch, as long as it holds and touches and is close enough, you want to hold the 20-day EMA. That's where you go long and you buy. So the 20-day EMA is one of the questions I had asked was, how do you know where to join a trend? So the 20 EMA can be a very powerful way to show you how to join a trend. The 50-day simple moving average is the one that the professionals use, the institutional traders, the big swing traders. This is the one that they use primarily, because they're usually in it for big moves. And so they use this as a trend confirmation. So we, as day traders and retail traders, like to use the 20 SMA because it gives us more trades. But the big traders, where they're just looking at the long-term trend, they like to use the 50 SMA. So you can use actually a combination. And the strategy that I'm going to show you later on uses a combination of the 20 and the 50. And I will teach you how to do that. But the 50 SMA, this is where major reversals occur. Pretty much if it remains below the 50 SMA for a very long time, once it crosses it, it will be choppy. But that is the sign to you that once it crosses it for the first time, the bulls and bears are fighting it out. They want to fight out and they want to change the trend. That's when you should be aware that a potential change in trend could happen. Because once we start, after being comfortably below or above the 50 SMA, once we start closing past it, the bulls and bears are starting to fight. So there is a potential for a major reversal to happen. And then the 100 SMA. The 100 SMA, which is the 100 SMA is really the big support and resistance level. This is unlike the 50 SMA, which is where we get bulls and bears fighting, telling you that major reversal could happen. The 100 SMA is a support and resistance level. It's a big support and resistance level. There'll be big orders from small traders, big traders, hedge funds, institutions at the 100 SMA. Usually, it is very, very hard for an instrument, either forex, gold, or indices, to break the 100 SMA on the first try. It may get very close. It may test it. It may reject it. And it may take a second or third try before breaking through. The 100-day SMA is a major support and resistance level. And then the 200 SMA is the line between bull and bear markets. If NASDAQ, indices, NASDAQ, Dow, S&P, it breaks below the 200-day SMA, we're in a bear market. If it's above the 200 SMA, we're back in a bull market. And bulls markets, it usually is a nice, smooth uptrend. Bear markets are very fast, aggressive, quick, choppy downtrend. So when we are below the 200 SMA, you got to be in and out quickly. When we're above the 200 SMA in volatile markets, if we're above the 200 SMA, usually the trade can take its time. It takes longer. Usually it's smooth uptrend. Whereas if we're below the 200 SMA, it can be very, very choppy. Now, I want you to tell me, if you use moving averages, what's your favorite moving average to use? What period do you like? Or you don't use them at all. If you don't use them at all, put a thumbs down or an X. That's okay. But
Kathy, people are asking, what time frame is that chart that you're showing up right now?
Very good question. All the charts are daily time frame. 1 day chart. So let me know, what is your favorite moving average? 35. I haven't looked at that, Aldiha. I will. That's very interesting. And then 21 and 50 from Andres. Yes, the 21 is very popular. 21 EMA, that's a trick one. The 21 EMA is very close to the 20 EMA, but the 20 and 21 are very popular on an EMA and SMA perspective. I think we have some very smart traders here, Diego, because they're smart enough to use the more sophisticated EMAs that we don't talk about that often. 1850.
Yeah. I have the same question as Alejandro. How do you recognize a horizontal market without trend, and how you can trade that?
So that is the trickier one, right? First off, the most reliable tool is ADX, Average Directional Index. The Average Directional Index basically measures the strength of the trend. When you're in a horizontal market, usually the ADX is very low. Another way to look at this is that if you have a few moving averages, like some of our friends here use the 20, like Scarcy uses 20 EMA, 34 EMA, and 200 EMA. I also have, multiple EMAs on my chart. Jorge uses 1850, 200. When the lines are all crossing together and they're very close, that's usually a horizontal market. When the lines are more separate and, they are further away from each other, that is more of a trending market. So you can put on the 10, 20, and 50 and 100 and see if they're kind of moving into each other. If they're moving into each other, that's a horizontal market. If they're starting to separate, that's a trending market. And our smart traders here, you can see, Diego, our smart traders, many of them use multiple moving averages already. So they're kind of aware of this. I love the really good questions. Now,
would you like to trade those horizontal movements, or do you prefer to waiting for?
I do not trade the horizontal movements. One of the tricks or tactics to being a good trader is knowing to be patient too, only waiting for your setup. So I trade trend, and therefore when we have the spaghetti, the moving averages moving along, I don't trade. I wait for separation, or I wait for something, what I'm going to share with you right now. Fantastic. So many of you may not use daily charts, like Jo. He's saying that, do they work on shorter time frames? Yes, I use some of these setups on and moving averages on 4-hour charts and 1-hour charts. Now, I personally do not day trade 15-minute charts or 5-minute charts. My partner Boris does. The lowest I will go is 1 hour, but I do use this on the other time frames. But I also still have I still will check the 5-minute and the 15-minute to make sure that momentum is not moving against me. So let's talk about how to turn moving averages into a trading strategy. So the basic parameters, the tools that we use are what we just talked about: the 5 SMA, the 20 SMA, and the 5 SMA, the 20 EMA, and the 50 SMA. And this is for a daily chart. These are the basic parameters. Any charting package, any instrument, that is up to you. And these are the steps for a long trade. So I'm going to go through the rules, and then I'll show you the examples. So first thing you want to do is you want to look for the 5 SMA to close above the 20 EMA. When that happens, you want to also make sure that it is trading, the price is higher than, which means that it's trading above the 50-day SMA. Let's take a moment to think about what this means. So I want the 5 SMA to go above the 20 EMA. That means that I want the very, very short-term momentum to turn positive. But I want to make sure it is above the 50 SMA because I want to be consistent and aligned with the longer term trend. So I want the short-term momentum to turn positive, but I only want to buy when it is consistent with the longer term trend. Then we placed an order to buy at the 5 SMA because I don't want to buy high. I want to buy a little bit of retrace. I want to buy cheaper. I want to buy at value. I don't want to buy up. Your target is 400 pips or a close 50 pips below the 5 SMA. A lot of rules here, but I promise you when we look at the chart, it'll be simple. However, it's always good practice that if you're up already 100 to 150 pips, that's a really big chunky profit. If you're already up 100, 150 pips, move your stop to break even. Take off 25% or 50% of your position and let the last part ride because 400 pips is a big ask for the market. So it's always good trading practice that if we've already moved 1%, 1.5%, 100 to 150 pips in forex, move your stop to break even. Your stop should be 150 pips or 50 pips below the 50 SMA. Now, don't need to write down these rules. If I'm correct, Diego, the video is recorded. The replay will be online. You can watch it again. But this is much easier to understand when you look at the charts. So this is what we have. Pay very close attention. First off, the purple line is the 5. Purple line is the 5 SMA. The gold line is the 20 EMA. And it says 20 EMA here. I don't know why it says SMA. This is 20 EMA. The blue line is the 50. So let me repeat again. The purple is 5. The gold is 20. And the blue is 50. So what are we looking for? The first thing we're looking for is the purple, this very, very short term, 5 SMA, to close above the 20 EMA, which is the gold line. But we only buy if the price is above the smoothest 50 SMA. So here you see that the purple line rises above the gold line, and it is above the 50. This price, when it happens, is 104.50. But remember, we don't want to buy up. We want to buy cheap because we want to have a good risk reward. We don't need to chase the trade. This is a daily chart. So you place your order at the purple line, the 5 SMA. So you go long at the 5 SMA, which is 104.50. That's where you go long. It does move a little bit against us, no big deal. It goes down to 103.60, which is about a 90-point move. We wait, and then eventually it gains its upside momentum, and it goes up. This doesn't go all the way to 400 pips. It only goes to 390 pips. But hopefully, when it goes to 100 to 150 pips, you are starting to move your stop up. First to break even, maybe take off part of your position, and then start to move it up, maybe by the 5 SMA. Trail it so that you don't, if you're up 250, 300 pips, the worst thing to happen is to be so stubborn that you want the 400 pips that you don't lock in some profit. So if you're up 250, 300 pips, make sure you're locking in at least 100 pips. That's good trading. I can't teach you along the way, with every trade, but I want to share with you this principle. When you're up a chunky profit, start to lock it in. So this trade goes up to 390. Great. This one doesn't work out. This one is not a trade you take. The purple line crosses below the gold line. So you think, okay, the short-term momentum crosses below the long-term momentum. I should sell. No, because we are above the 50 SMA. So you don't take this short trade. That's why the 50 SMA protects you from bad trades. You want to make sure you only take it when, like this, when the 5 SMA, the purple line, closes above the 20 EMA, and we are above the 50 SMA. You go long at 108.95, and this one's a really beautiful move that goes up to 470 pips. Right now, we have a live trade in Eurodollar because right now we have the cross and we're above the 50 SMA. We'll have to see how it plays out. But right now, we currently have a live trade. And once again, look at this. This is when we cross. We don't want to pay up. We don't want to buy the close. We wait for it to retrace to the purple line, and we buy the retrace to the purple line. Here is another example. This is an example in dollar yen. That was the euro dollar. Here we see right here, the purple line goes above the yellow line, and we're above the blue line. But we wait for a retrace to the 5 SMA. We go long here. So we go long basically at 153.20 or so. And it goes all the way up to 158. So almost 500-point move in dollar yen. What about the short trades? Here are the rules for selling. So same principle. You want to look for the 5 SMA to drop below the 20 EMA. You want to make sure it is that the price is below the 50 SMA, that we're only selling in a downtrend. But we want to sell at a higher price. We want to get a good price, a good value. So we place our order to sell when it retraces back to the 5 SMA because we don't want to pay too low or sell too low. Target 400 pips, or you can exit on the close at the 50 pip SMA. At this point, you're in profit. You can do what you want, use the rules that you want. But it is always good practice that if you're up 100, 150 pips, start locking in. Start moving to break even. Start locking. You're up 200 pips, lock in 100 pips. Always good practice. Stop is 150 pips. Worst case stop. Lose no more than 150 pip or 50 pips at the SMA. This is Eurodollar again. Let's look at the chart. So first off, I want you to look at this one where the purple line is rising above the gold line. This should be a long trade, right? But no, because we are below the 50 SMA. No, we don't take this trade. And the 50 SMA protects us from taking a fake and a bad long trade. Instead, we wait for the right setup. We wait for the purple line to drop below the gold line. Make sure we're below the 50 SMA. So we sell here at 108.10. And look, this is a 470 point move in euro dollar. Here, same thing. We don't take this long trade. Our 50 SMA, make sure we only sell when the longer term trend is bearish as well. We wait for this setup. So we sell here and we sell at 105.08. And this one goes all the way down to 102. So it's only 300 pips. But hopefully when it's 150 pips, you're moving your stop to break even. When you're 200 pips in the money, you're moving your stop to plus 100. When you're 250 pips, you're continuing to lock in. Now, this does not work on dollar Chilean peso. Why? Because it is much more of a tighter, narrower trading range. And so it doesn't work the same way in dollar CLP. In dollar CLP, the 50 SMA is far less effective. The way it does work in dollar Chilean peso is that because it has such a tight range, the 50 SMA is not helpful at all. So instead, what you want to do is take out the 50 SMA. So when you have a narrow band, take out the 50 SMA, just use the 20 and 5. So here we are selling when the 5 drops below the 20. You're selling and you're staying in this trade until it closes here. And then you go long when the 5 goes above the 20. And look at this beautiful move that you're capturing here. And in here, you sell when we drop below, when the 5 drops below the 20. So when you have a pair like the Chilean peso that has very, very narrow ranges sometimes, the longer term moving averages are less effective. So you can still use this strategy with the dollar CLP, but just take out the 50 SMA. And this is the most recent chart. And then going back some more, you can see even other more good examples. You sell here, it goes down. This one doesn't work out. That's okay. There are winners and there's losers. But the long trade works out really nice. The long trade here works out really nice. The short trade here works out really nice. So let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 out of 9 winners. Those are the odds I like. That's what I call high probability. And this is a way to do high probability and high profit. You will never have 100% win. Someone guarantees you that and they only show you winners, they're lying to you. But this is a real chart. I encourage you to put this on your platform. Put on the 5 SMA. Put on the 20 EMA. Look for yourself these examples that I show you in real time. So that's the trading strategy. And I hope that you found it valuable. And I hope that you can use it as a part of your trade. And I hope that you learn something and you enjoy it. Now, I always incorporate fundamentals in my trade. I know I'm going over time, but I just want to share with you how I incorporate fundamentals. I have 5 basic rules when I start my day. Every single day, I check the news. I check the data. Did Trump say something overnight? Did the ECB do something in the morning? I check to see, was there some sort of important economic data that was released while I was sleeping. So the first thing I do every day is I check the news and the data. The second thing I do is I check what are stock futures are doing. That helps me understand, is it a risk on or a risk off day? Is it a day I should be looking to sell or is it a day I should be looking to buy? I do not fade. If stocks are down, I will be looking to sell anything. It could be stock, it could be indices, it could be currencies. If stocks are up, I'm going to be looking to buy indices or currencies. I follow the flow. I do not fade it. I also check to see how US yields are doing because that tells me how the US dollar could do. I also check what the US dollar is doing because that impacts how gold is trading, how other currencies are trading. And then I look to see which are the strongest and which are the weakest currencies because I want to buy strength and sell weakness. So step 1, my trading plan is I look at what are stocks doing. The reason why this is so important is because look at this. This is a chart of Aussie yen. Aussie yen is the candles. The orange line is the S&P. And on a one-day chart, you can see that they move together, right? They move in line with each other. And that is why I always try to be aligned with what stocks are doing. Same thing with Eurodollar. And this works on the one-day chart and the 1 hour chart. They usually move in sync with each other. Of course, unless there's some sort of big news from Europe, like a debt crisis or something. But generally speaking, they move with each other. So I will always, if stocks are down, I will only be looking for opportunities to sell Eurodollar. If stocks are up, I will only be looking for opportunities to buy Eurodollar. And same thing with gold. Gold, interestingly enough, actually has a negative correlation, not a positive correlation. But I will always follow what stocks are doing. Then I will also look at yields. How are yields doing? How are bonds doing? And the reason why I do that is, especially for dollar yen, is look at this. I mean, they look like mirror images of each other. If US yields are going up, I'm going to be looking for opportunities to buy dollar yen. If my trading setup tells me sell dollar yen, Kathy, but US yields are up, what am I going to do? Not take the trade. If my trading setup tells me to buy dollar yen and yields are down, what am I going to do? Not take the trade. But if yields are up, the dollar US yields are up, and my setup tells me to buy dollar yen, that's double confirmation. I want the confirmation from yields and from stocks. And it works for Eurodollar too. But of course, if yields are up, Eurodollar is going down because the dollar is on the bottom of the quote. And it works for gold as well, because gold is priced in dollars. So if the dollar is going up, most likely gold is going down. If the dollar is going down, most likely gold is going up. So always keep an eye on the dollar. So the most important thing is that you want to look for trades on a fundamental basis when you incorporate sentiment that is in the direction of yields and stocks. And then you want to see how the US dollar itself is performing. US, this is important for gold traders. I already showed you that gold moves opposite from the dollar index. So many of you are gold traders. So it's very important for you to follow what gold is doing. And then, of course, always, check the fundamentals, check the news, check to see whether the market is bullish or bearish, because you always want sentiment on your side. And only after you've looked at all of these, which really only takes like 5 minutes, honestly, 10 minutes maximum, to look at, what are stocks doing? What are bond yields doing? What was the news overnight? Only after you get a good grasp of that, should you check your charts to trade your setup. That is the 5 steps that I use for my own trading day. And I truly, truly love to trade with moving averages. And I hope that you saw some value in that as well today. And now I would like to open the floor up to questions. I can't hear you, Diego. I'm sorry. I don't think your volume is on. Maybe Diego can do a mic check to see I'm not the only one. Let me see if there's any questions.
Hello.
Yes, you are on now.
Great. Thank you very much. Well, first of all, thank you for your excellent presentation. It's pretty complete, of course. See, from fundamentals to specific strategies, risk management. Maybe risk management, it could be one of the most interesting things to ask about right now, because regarding moving average, we have specific levels of a specific trend. So this is one of myself. One question: how do you manage the stop loss? Do you go for a break even constantly, or you have a global stop loss for all trades?
Well, I always have a stop loss. That's number one thing, is you always need to have a stop loss. And then once and you need to stick to that stop loss. But once the trade moves in your favor, usually trailing by the moving average, a short-term moving average, like the 5 SMA is very useful. And if you want a little bit more breathing room, you could use the 10 or 20, but depending upon how much breathing room you want. But the moving averages are very, very valuable and useful in helping you set trailing stops. Or, if we're going for the big moves like 400 pips, I also will trail by every 50. Usually I will have a hard stop, and then I also have a move it based upon the moving average.
Perfecto, perfecto. Vamos a sintetizar un poco lo que hemos visto el día de hoy de la presentación de Katy, muy completa desde puntos fundamentales, estar atento a la macroeconomía, que a veces se nos escapa un poquitito por estar solamente mirando gráficos. Tenemos que tener un consenso general de cuál es el sentimiento del mercado. Eso fue con lo que yo me quedé. Podemos manejar estrategias técnicas, podemos manejar muchos indicadores, pero tenemos que agregar todos los ingredientes a nuestra mezcladora y tener una conclusión final desde fundamentales, macroeconomía, estrategia, gestión del riesgo. Evidentemente, el mundo del trading no es sencillo, pero si manejamos los puntos clave de las distintas áreas del mundo del trading, podemos tener una conclusión final. Katy, we are going to start with the questions section, and that includes Brazil questions. We have an exclusive Brazilian streaming, so they are sending some questions for you, and that is what I'm going to do right now, because we have this question from Sydney Reese. When using moving average for day trading, can we apply the same principle to NASDAQ, euro, dollar? In other words, can we use it across multiple assets? Okay, this is a frequent question. We have a specific strategy. Can we use this for all assets, or it's rather to be used in a specific ones?
You can use it for all instruments. And I think that, you see other people commenting in the chat. They trade other instruments as well. Many of them may not be forex traders. These are just principles, because if you think about it, it's all about the average price, right? But the one thing to pay attention to is, remember how I said with dollar CLP, it's very different. When you have instruments that are very tightly bound, it's not as reliable. But when you have just actively traded instruments like NASDAQ, S&P, gold, euro dollar, though, yes, the people use this stuff all the time.
Perfect, perfect. This is an interesting one, because this is maybe beyond this presentation, but of course, I'm pretty sure that is something that you are researching on right now, and it's regarding AI. How do you see AI impacting traders' conduct in the future?
I think AI is amazing. Actually, I don't show it today, but what you could do is you can use AI to program and code your strategies. You can say in very simple language, I want you to create an indicator for me that is the 5 and then the 20 EMA, and to code it in the language that your charting package has, and to create it as an indicator or strategy for you back test. So for those of you that don't know how to code, AI helps you do that. And I also think that there's a lot of tools that are coming in the market that can help traders better understand what's going on in the markets. You can talk to it and say, what is the dollar doing? What is driving the dollar up and down today? You can talk to ChatGPT. So or Grok, and there's, they can tell you exactly what's happening. So I think it's very, very valuable.
Would you recommend to get deep on this coding and AI stuff if you are not experienced on tech?
I don't think it's necessary at all. I think that it's, trading can be very simple. It's very interesting. I was just creating a YouTube video for our own channel, and I was the YouTube video is about trading rules that were developed 100 years ago by Jesse Livermore, and how they still are valid today, and how I use them today. So if you think about that, these are trading rules created 100 years ago. You can still trade effectively without having to know AI or GPT, because the same principles that were used 100 years ago still work today. and I still use them for my trades. And it's basic things like go only buy in the direction of the trend, and things like that doesn't need to be coded.
Perfect, perfect. And now we are going to start with the LATAM questions. So, a todos quienes estén mirando la transmisión desde LATAM, vayan escribiendo las preguntas para que se las podamos realizar a Katy. La verdad es que con la experiencia que tiene nos puede hablar sobre diversos temas. ¿Sí? Ya empezamos un poco a extendernos a lo que es la inteligencia artificial en el trading, pero me gustaría que vayan ustedes mismos dejando preguntas. Aquí hay una que a mí me interesa mucho. For me, it's very important, the volume stuff. Do you use volume data for your trades?
I personally do not use volume data because I trade forex and it's less valuable. But I've been doing a lot of research on gold, and volume is very, very applicable. I mean, you have to use volume for gold, and you have to use volume for indices. I mean, that's the way most of the consistently profitable traders trade, which is they use volume profile analysis.
But regarding your presentation, you used to trade when the volume goes up, maybe data releasing or breakouts from the relevant resistances. So it's maybe you unconsciously use the volume data.
It's very true because I trade the most active market hours. So naturally, volume is high during the most active market hours. But the way people use volume, I think when they trade gold is slightly different. They like to see, certain price levels tested with or broken with high volume. And in the forex market, the volume data is not as reliable as gold and indices.
Perfect, perfect. Differences between simple moving average and exponential moving average.
Very good question. You know what? You can actually ask ChatGPT this too in Spanish, and it'll probably give you the answer. But the primary difference is that the exponential moving average gives more weight to the most recent prices. Whereas the simple moving average just takes the average of all the numbers. But I encourage you, if you want to really understand this, ask ChatGPT in Spanish and I'll explain it to you. And if you say, can you explain this in more detail? That's a really good way to use AI to help you become a better trader.
Perfect. This is regarding psychology. I think it's pretty important to manage this stuff. Considering your experience on the field, do you nowadays stress yourself with trading?
Not necessarily. Okay, I want to explain something, which is that I have been trading my own trading strategy, and this is the same strategy for 10 years now. So there will, of course, be winning days and losing days. But because I understand my strategy so well, I understand that certain, like, for example, when there are weeks where we're waiting for non-farm payrolls to come out, or we're waiting for tariff announcement, you will have horizontal markets where my strategy will not work well. And that's okay, because I truly understand that, when the market actually gets momentum, that's when it works well. So the point I want to make is that I don't stress about it because I've been trading my strategy so long, and I understand when it works and when it doesn't work. And I understand that in the course of a month, it's going to work, 70, 80% of the time, and 20% it may not. And that's part of understanding yourself and understanding your strategy and experience.
Perfecto, perfecto. Me parece que hemos tenido el día de hoy una presentación espectacular por parte de Katy. Por supuesto que esperamos seguir trabajando con ella en el futuro. Es una de las principales referencias del mundo del trading. Ya saben que siempre hacemos el mejor esfuerzo por tener contenido de trading, ahora expandiéndolo un poquito más a leyendas internacionales. Por lo tanto, muy, muy agradecidos. Very, very appreciated your presentation, Katy. It was wonderful to know how do you actually manage your trades, from fundamental strategies, risk management, of course, and we are absolutely sure that you have way more knowledge to share. So we really expect you continue working with XTB. So thank you very much. It was amazing. If you want to share some words with people, this is your space. Feel free to say anything you want.
Well, thank you so much for having me. As Diego says, each of the topics from risk management to psychology to trading can be entire presentations in and of themselves. But I tried to give you a little bit of as much as possible that I could today. And so I hope, we'll have an opportunity to talk again. And, I would love if you can subscribe to my Spanish channel. I'm trying to grow it. It's called BK Espanol on YouTube. BKESPANOL. So please subscribe to my channel there. We're just starting off and growing it. So I'd really appreciate that.
Thank you, Katy. We hope to see you again.
Thank you so much.
Bye bye. Muy bien, estimados, nos vamos quedando con una larga jornada todavía. Ahora en un par de minutos viene Ignacio Mieres de la casa, ya lo conocen. La idea ahora es poder mover un poquitito las piernas, descansar un poquitito de tanta información. La verdad es que fue un excelente comienzo para dar inicio a esta jornada de maestros del trading, así que les agradecemos su ponencia, pero en ningún caso esto se ha acabado. Ahora estamos recién empezando, un par de segundos y viene Ignacio. Nos vemos en un par de segunditos.